People always want help when the market sells off. They want me to tell them what to do, to validate their fears. When stocks get hammered, investors freak out. They panic, or at least they want to panic. I think that's right. I mean, I obviously don't want you to panic, but that's what people are doing. Many don't know what's going wrong. Few can easily handle the trauma of big losses. And even the smartest operators want some expert advice. But after more than 4 decades in this industry, I can't recall a single time when someone's come up to me and plaintively asked, Jim, the market's rallying like crazy. What the heck do we do? Hey, that's unfortunate, because just as you need a playbook to deal with declines, like I just mentioned, you also need a rally playbook, a guide that tells you what to do when the market's having a big short-term run. Not sell-off, but run. I know the received wisdom is that nobody wants to help with a rally, but you need to reject that idea that people only need help when the market's lousy. There are all kinds of mistakes you can make when the stocks are going higher. In fact, the rally playbook might be more important than the sell-off playbook, if only because so few people think they need one. So here's my first rule for handling a rally. Always be really, really, really tough on your portfolio, not just on the down days, but on the big up days. The only time you should be harder on the stocks you own is when you're in the midst of a brutal decline with no end in sight and the need to circle the wagons, meaning dump everything you aren't thrilled to own and use the cash to shore up your positions in the stocks where you have the most conviction. Obviously, that's a worst-case scenario.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.